What's up, you guys? I'm Dan. This is Frugal Not Cheap. 2024 is almost over, and year end is a great time to do a financial checkup. Let's talk about it. So I put a list of things together that we could do as a financial tune-up or a financial checkup at year's end. And I didn't plan this, but it just so happened to come out to 10 things. So I guess here's my sort of 10-point financial checklist. Before I go any further though, just a quick disclaimer that this is not tax advice. Every situation is different. Consult a professional, make your own decisions. It's just informational and what I'm thinking about from my own situation. So the first item before the year is over is contributing to retirement plans for the year 2024. For employer-sponsored plans like a 401k, you've got until the end of the year. Personally, what I do is I just figure out what is the maximum that we can contribute for that particular year, and then I ask payroll to divide that by the number of pay periods so that by the end of the year I've contributed the entire maximum. We have a little bit longer, but we can go ahead and do it if we want to. We have until April for individual retirement accounts. These can be Roth or traditional. Again, with those, what I do is I take the total amount that is the contribution limit for the year, divide that by the number of the pay periods, and then have an automatic withdrawal made from my checking account transferred over to that individual retirement account. In my case, it's a Roth IRA. And I have that happen automatically every week, so I never have to think about it. Another kind of account that we could contribute to before year's end would be a 529 plan. So if you've got children or grandchildren or whatever that you want to help out in this regard in terms of their education, then you've got until December the 31st to get that done. I do have a video, by the way, on how much more flexible and powerful 529 plans have gotten. You can check that out over here. Sorry, that's not an actual link. I don't take the time to do that, but anyway, there is a link to the video in the description. And it's worth mentioning, by the way, that you could put up to $18,000 a year into this 529 plan without triggering the gift tax. That's if you're filing single. If you're filing jointly, then you get double that, of course. Number two, this doesn't really apply to me, but it will at some point, is to take required minimum distributions if necessary. So if I turn 23 in 2024, then I would be required to take my initial RMD by April of 2025, and then I would have to do that before the end of each calendar year after that. Also, if I'd inherited an IRA, which I haven't, but one after January of 2020, then there is a new rule that requires that it be liquidated within 10 years of the original owner's death. So neither of these apply to me. Next, we've got something that also doesn't apply to me just yet, but will in the future. Number three is to do a Roth conversion. So what we're doing here is taking accounts that are in a pre-tax account, like a traditional IRA, converting them into a Roth, which we do have to pay taxes on as income, but once converted, then we don't have to pay any gains. Then we don't have to pay any tax on any gains from there on out. And also Roth accounts are not subject to required minimum distributions. So again, I'm not doing any Roth conversions right now, but when I do eventually fire abroad, I will be starting to do that in order to gain access to my 401k funds. What I'm going to do is what's called a Roth conversion ladder. I've got a video on that as well. But basically, you take the 401k, you roll it into a traditional IRA, and then each year you convert your annual spending from a traditional to a Roth. And then after 5 years of sitting in the Roth, then you're able to start to spend those funds. Number four is to make charitable contributions. Now, in my case, the standard deduction is so high these days that, and I don't, give that much on an annual basis that it would make any difference to start itemizing. But this is definitely a consideration. Number five is to use up like a flexible savings account. These are typically ones that you can only roll over so much money from year to year. So it makes sense to spend it on sort of more durable kind of medical expenses, things that you might need that are going to last at least 6 months or something like that. Or maybe you can pre-spend some stuff for, early in the next year, that kind of thing. I actually stopped using my FSA. It was too much trouble, honestly, to be worth the tax savings because thankfully I don't have that many out-of-pocket medical expenses. Number six, this is kind of a big one for me, is to review annual spending and tweak the budget if necessary, see how we did against the budget, and then make any tweaks if there's some structural changes in life that have happened. So of course I will be doing that annual financial review for myself come 2025. I'll be looking at 2024 2024, so look forward to a video on that. Number 7 is another big one that I like to do annually, and that is to rebalance the portfolio. In my particular case, it's a really simple portfolio. All I've got are equities, no bonds, and no other asset classes, and all I'm doing is splitting it 60-40 between US and international. So to whatever degree that I'm off of that as of the end of the year or near the end of the year, then I'll do a quick rebalance to get myself back to that 60-40, and that's that. Number 8 is kind of a more advanced one, I guess. I don't know, whatever. And that is to do some tax loss harvesting or tax gain harvesting as well. So with the tax loss harvest, basically you're going to be realizing a capital loss, realizing a loss on some equity holdings, and then you might buy something that's, not equal and not too similar, but in the similar veins, so that you're able to still stay in the market. That's something you can do. You don't want to have a wash sale, but there are ways to find a pair, like another index that's kind of similar but not exactly the same. That would be a good pair for tax loss harvesting. In effect, that will reduce your tax liability for that year because you're going to be able to deduct those losses. On the other end though, and this is something I'll be looking at when I fire, is when I have a really low tax liability, there's a lot of space to realize capital gains before you have to pay any tax. We're talking about $40,000 for a single person. And that room is going to allow me to thereby harvest gains and basically step up my cost basis to avoid taxation in the future. So that's another thing that we can do. Number 9 is just to check beneficiaries. In my case, it's pretty simple, but as things change, it's a good opportunity to just say, oh, hey, are my beneficiaries all set the way that I want them to? Especially considering that, this beneficiary selection often it'll go before a lot of the other process that happens after you die. So it's makes things a lot easier and cleaner in terms of getting those funds to the people that you want them to go to. And finally, number 10 is another thing that's looking forward to the future, and that is to set up all of your contributions for the 2025 year. So in my case, I already sent an email to my controller, basically saying, hey, please max out the 401k for 2025. There was a modest increase in the maximum contribution there, so that was good. And then I would also set up, my IRA contributions as well. But here, those unfortunately stay flat from last year. I think it's at 6K. I'll put the number up here. But yeah, so I'm not going to be making changes there. But probably, the following year, there will be another sort of inflation adjustment to raise that contribution limit. And then while I'm at it, because I've already reviewed my budget, I may also adjust the amount that automatically goes into my after-tax or my brokerage account on a pay period basis as well. In my case, it looks like it's probably going to be pretty steady, but we shall see. I might get a raise later on in the year, who knows. So that's my list of 10 things that serve as a good annual kind of, financial checkup or tune-up. Did I miss anything? Please let us know in the comments. Hope you enjoyed today's video and found it helpful. If you did, please hit the like button and consider subscribing. Thank you very much for watching, and I'll see you in the next video.